Well, good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. I'm going to be your host for the next hour and a half or so. We'll see what the markets are doing this morning. For those of you who are new to the trading room and the diversified trading system, let me give you a real quick overview. The diversified trading system is diversified because we're looking at the market from three different points of view. We have three different tools, one each designed for each of the peculiar market environments. Here in the top left, we have the Hawk Scalper. Top right, Falcon Swing Trader. Bottom left, Eagle Trend Trader. And the bottom right is the Raptor. That's the latest addition to the DTS family. And the Raptor incorporates elements of the other three tools. The charts you see here are the NASDAQ. I'm also following soybeans and crude oil this morning, but I would be happy to take a look at any market which is of interest to you. Let's take a look here. Perhaps let's start with the Falcon on the NASDAQ. The market's been relatively quiet the last few days. It's hard to say for sure. I'm sure all the stuff that's going on with Greece and so on is weighing heavily on the market. Here was yesterday's session. We had a little bit of a sell-off. Then it kind of flattened out and went a little bit higher. We got a couple signals through here, but nothing really big. Here was the London Open last night. The market gave us a trend change signal here on our Falcon. You're going to notice all the signals develop the same way on all the tools. First we get a warning dot, then we get a triangle and hash mark. And we're looking for essentially for everything to be in sync. That's the basic signal where everything comes into sync and then we buy or sell. Now we've hit this sideways action again, and now we're actually working on a trend change signal to the upside. Boy, the NASDAQ just does not want to give up. All right. The NASDAQ, of course, playing off of some really significant highs. As are the rest of the stock indices. Here on our Hawk, we're also getting a first micro-macro cross signal. This is a high probability signal. The market is in a little bit of a sideways range, though. I wonder if I should just dial that down a little bit. Just throw a onesie on here instead. And if we happen to break to the upside here, I'll see whether we can get a runner out of this. All right, so I'm going to close my profit target. We actually had a positive slip on that. That's unusual. The last few days, the market's always been giving us a little bit of negative slip. This one showing us a little bit of positive slip. It's still early, of course. It's only the first few minutes of the market open. So that's part of the reason I dialed down the risk amount a little bit here. I just took a onesie. This is kind of a dipping your toe in the water kind of trade. So the first micro-macro cross signal develops when the micro line, that's this thin one, crosses the macro line. And it's the first signal where everything is in sync. So you see we have green warning dots, green bars, green filter. This tends to be a very high probability signal. We'll see how it works out this time. The problem here, of course, is the market is rather range bound at the moment. So the buyers are testing it to the upside. Just about to hit the break-even trigger. Oops, I guess I need to enable my stop. There we go. There we go. All right, a good little rally so far. I might try one of our other stop strategies. We have 16 different stop strategies to choose from. I'm going to go with the parabolics, which tend to be a little bit more aggressive. And actually, we got a fair amount of open profit here. Maybe I'm going to go with the bar high-low, which is even more aggressive still. There we go. Let's protect some of that open profit. Oh, they flashed $100. Get up there. Here we go. Come on. $100 is a pretty considerable trade on the hawk, $100 per contract, especially on the NQ. I may just pop out of that. Go ahead. Show me 100 again. I dare you. Come on. Oh, give me 105. There it is. Okay. Well, that's all right. That's a good little start for a little onesie. Of course, what I'm looking at here is the resistance from the overnight and yesterday. It's not to say the market won't break through, but why be greedy? I'll take what I can get sometimes, especially the way the market's been of late. My goodness. Each of these stop strategies, by the way, are fully customizable. So you can adjust the settings to your liking. I'm going to make a note in my journal now. I popped out here at 105. I'm going to make a note in my trading journal whether I would have been better off holding on to that a little bit longer. Okay, some great questions this morning. Ovidiu, I'm sorry if I mispronounced your name, wants to see crude oil, and I will be happy to pull up crude oil for you. Crude oil, of course, crude inventories today. And you're also asking what version of Ninja is this? It's not the latest upgrade. They just came out, I think, with Ninja 8, and I think it's still in beta. So I tend not to pick up the beta versions. I'll wait until everything is, all the wrinkles are out of it, and then I'll upgrade to the latest version. So this is whatever the last stable version of Ninja was, that's the one I'm running. John is asking, can this be set up to auto trade? Not currently, John. However, I know that Adam is working on an auto trade version. There has been a lot of interest in an auto trade DTS. Fortunately, however, the signals themselves are not that complex. It looks a little complex now, I know, because you're just seeing it perhaps for the first time, but let me show you here really quickly. We have what we call a cheat sheet. And what that does is it essentially shows you the highest probability signals that we tend to look for. Namely, here's our hawk scalper. So these are the 5 basic signals we're interested in, like the first micro-macro cross, the macro pullback signal, the 4-arrow consolidation, the post 4-arrow consolidation, which coincidentally is also another macro pullback, and a red bar buy or green bar sell. So you're going to notice there's several signals through here that we're not really interested in. These are the ones that we're going to focus on because these are our highest probability signals. And that's going to be true for all our tools. Mark is asking, Eric, why was that a first micro-macro cross when the micro-macro lines truly didn't cross? Great question, Mark. The first micro-macro cross very often develops just as the micro line and macro line crosses over. This is almost textbook right here. So the micro line crosses the macro line, the signal develops, it prints, and away we go. everything is in sync. The one we saw this morning, however, not quite as neat and tidy, but it was still a first micro-macro cross. Why? Well, technically the micro-macro lines crossed over here. They did not cross here. But what the first micro-macro cross shows you is a market that is out of sync, and then it comes back into sync. And once it is in sync, once the market actually has a bias to it, then we want to commit to the trade. So here everything was out of sync just prior to the signal. Bar color was out of sync, trend lines were out of sync, filter was out of sync. But then everything came back into sync. So this is why you can actually have more than one first micro-macro cross within a trend. It's when everything goes out of sync and comes back into sync. So here we had, in the wee hours of the morning, we had a first micro-macro cross to the downside. Not as much follow through as the one we had this morning, but still enough to hit our profit objective. Then the market retreats, but look, everything goes out of sync. Our bar color is out of sync, our trend lines are out of sync, even our filter is out of sync. And then we come back and we produce another first micro-macro cross signal. Now this one failed. It had no follow through. Well, it didn't fail in the sense that it cost you any money. The trade never triggered. But interestingly enough, the fact that the first micro-macro cross did not trigger is actually a hint that the market may be changing direction, because this is a very high probability trade, right? So when it didn't short and sell to the downside, even though everything was set up for it, we can actually start thinking, maybe this market's going to go long. And of course, after a few hours, it did decide to go long. But that was a very early clue that perhaps the sellers were losing their grip, because they should have been able to push it lower from there. Then, of course, we had all this yellow bar action, and now we come back with our first micro-macro cross where everything is in sync. These signals that we're printing now, I'm not so interested in because, well, they don't really line up with any of our high probability signals. I will wait for a 4-arrow consolidation or maybe a macro pullback signal before perhaps recommitting to the trade. Ken is asking, Adam, what trading system is that? Well, Adam is actually the owner of Indicator Warehouse. I'm Eric. This is the Diversified trading system. And just in case you missed the introduction, it's diversified because we're looking at the market from 3 different points of view. So we have 3 separate tools to deal with each of the individual market conditions. So here on the top left, we have the Hawk Scalper, top right, Falcon Swing Trader, bottom left, Eagle Trend Trader, and the bottom right is the Raptor. The Raptor is the latest of the DTS tools, and as I mentioned, it incorporates elements of the other 3 birds all into one, for those folks who are more interested in a one-screen type system. So while we were trading our Hawk trade, we actually had an early trend change signal here on our Falcon. And once again, you can see everything comes into sync. The signal produces a warning dot, triangle and hash mark when the signal is complete. You can see our trend line just turned green. That's what makes that an early trend change signal. And remember, with the early trend change signals, we need to see this test of the extreme, right? We need to see, in this case, this up, down, up pattern where we're making a higher swing low. That's what allows us to take that early trend change signal on the Falcon. It was a little easier to take on the Hawk, but here was a trade on the Falcon nonetheless. And it too hit our high probability profit target and now is starting to flounder a little bit. So it's always amazing how the market finds those high probability targets and then starts to slow or perhaps even change direction. The lines that you see on here, these are part of the Ultimate Support and Resistance Suite. And by the way, if you guys want more information about any of the tools or add-ons that you see here, you can follow that link that I just put in your window. The Ultimate Support and Resistance Suite will work on any chart, not just DTS. These are not pivot points. These are not Fibonacci levels. If they happen to coincide with one, it's a coincidence. And you've got an assortment of 21 support and resistance lines for today's trading. And you can see that we're pretty much stuck at the moment between the primary resistance, which is this blue at the top, and the primary support, which is the blue at the bottom, where the median line pretty much has skewered the market. Took a little bit of a bounce here off of the secondary support line. But yeah, kind of a sideways market for the most part today, or so far today. Let's take a look at the Eagle Trend Trader. Look at the daybreak lines here. Just shows you how quiet the market has been. Not really in trend mode, at least not yesterday. Day before on Monday, a little better, but even the North American session gave us a couple signals, but nothing too terribly serious. Friday, I think, was a better session. Yes, Friday had a nice progression lower. This is another add-on that you see here on the top. This is the Trade Forecaster, and it will tell you the current market condition and what the next market condition is likely to be. So right now, we are in trend mode for about another 40 minutes, after which we're going to be moving into scalp mode. So hopefully we'll be getting a signal out of that. Here we don't have any complete signal just yet. Still waiting on a signal to print on the Eagle Trend Trader. And the Raptor, let's take a look here at the Raptor. The Raptor, as I said, is a little bit of a blend. And we had we actually had a reversal signal here. How does Jim, one of the fellows in our trading room, okay, let's see if I can get this right, Jim. He calls this a, oh shoot, I'm going to get it wrong, a sell buy or something like that. But essentially it shows you the failure and then it comes right back with a buy signal. That's a high probability signal here on the Raptor. They did give us a double pullback. It's surprising actually that that did fail, but I think again our early clues were that here in the overnight we had the sell signal peter out so early. The market retreated back into the hard edge of the trading band. This trading band gives us our directional bias and essentially had a rule of three similar to what we see on the Eagle Trend Trader. This tool here that you see, this is the latest tool from Indicator Warehouse. It's called the Geiger Counter. It's actually a tape reader so that you can see the market, the price flow, the action, the bid and ask levels. So right now you can see the Geiger Counter, the needle a little bit more bearish at the moment. A lot of sell orders coming in. We tend to look for peaks on here, which would suggest stop running. And now you can see the needle is getting a little bit more neutral as things start to even out. So the Raptor not quite printing a signal yet, but we'll see. We'll see if we got a chance to get in on a trade with the Raptor there. Okay. Ken's asking about the trade manager. He's asking, is that a part of the system or is that an add-on? The trade manager is actually an add-on feature. And this is a huge tool. I can't overemphasize how important this tool is to your trading. What the trade manager does is it protects your risk exposure by only allowing you to take a certain or risking a certain percentage on your trade. So for instance, here, maybe I should do it on the Falcon because, okay, so let's say we're going to take this buy signal, which is about to print. We got the warning dots. We can set up, let's say we're going to take the trade down here. Trade manager says, okay, Eric, according to your account, you can risk you can take 2 contracts. It's going to cost you $500 if you're wrong. Now, don't freak out if $500 seems like a lot of money to you. This is based on my account. All right. If your account is, say, $10,000, then you would only be allowed to risk $200. In fact, let me dial down the risk amount here, and you're going to see that, let's say I try to take a trade and I try to risk it way down here. Oh, see, Trade Manager won't even let me take the trade. It's saying, nope, sorry, Eric, you can't afford that trade, so don't even think about it. So in that way, it helps protect your risk exposure. The other thing it does for you is it always correctly capitalizes your position. So let's say we were looking at buying here, and let's say we're going to use our stop strategy for our stop loss. Trade Manager says, okay, you can afford 2 contracts. Now, what if I choose to run a deeper stop? Let's say I'm going to go with the swing high-low strategy, and I'm going to run my stop down here. Trade Manager says, okay, but now you can only afford 1 contract. But notice my risk amount never changed. What changed was my position size. And this is how you protect yourself. This is truly how you cut your losses short and let your profits run. Very, very important concept. Again, I cannot overemphasize how important that is to your trading. You can also preset up to 3 profit targets and have a runner in play. And you can preset your targets down here, or you can manually set your targets if you choose. So it does all that. The best part is it will automatically manage your position for you. So that frees you up, quite honestly, just to look for other trades. Or if you're unsure of how you want to manage a trade, it will do that all for you. So a really incredible tool. Incredible tool. This was Adam's brainchild from years ago. The programming behind it is pretty sophisticated stuff. Pretty incredible, really. Okay. Ovidio is asking, are those lines based on simple moving averages or exponential moving averages? I'll tell you right now, folks, while these are custom lines, so they're neither. However, what you see going on here, it only scratches the surface. There are algorithms that are running behind the scene. There is about a half a dozen parameters that need to be met before you even print a warning dot. So it's impossible for me to tell you all the things that the system has to do to produce a signal. It's not simply a crossover of the moving average lines. No, what you see on the chart is just the tools you need to make a decision. Right? We've tried to keep the charts as clean as possible so that you can make a decision on a trade, whether you want to buy or whether you want to sell. Christopher is asking, may I see the support and resistance screen again? Most definitely. There you go. Excuse me. So as I mentioned, there's an assortment of 21 lines. Only twice have I run out of lines. No, sorry, 3 times. Once on the NASDAQ, twice on crude oil. And these are forecast for the next day. So these are yesterday's lines right here. You can see the market was pretty much sandwiched again between the primary resistance and the primary support. Those are those blue lines. In fact, yesterday the market spent most of the day between the median line and the primary support level. And then here's the activity from the day before. You can see the market got a little bit more bullish. We got into some of the green resistance lines, which also act as support, obviously. All right, crude oil. I almost forgot about crude oil. Let's take a look here at crude inventories, of course, out in about a half an hour's time. So here's crude oil on the hawk. For those of you in the European time zones or even on the eastern seaboard, if you're an early riser, you would have had a chance to take that first micro-macro cross right there. If not, you had a macro pullback signal that you could have taken advantage of right here. This again is on the hawk scalper. I don't do the yellow bars. The exception is the 4-arrow consolidation, but in crude we only look for 3 arrows because crude tends to move a little bit sooner. We did have a 3-arrow consolidation, so within the span of a couple of hours we had 3 solid signals here on crude oil alone. This one, the yellow bar, spoiled. And now here was a green bar sell. Now the green bar sell, we can buy or sell. It's one of those signals that occurs near the end of a trend. And you can see this one was practically textbook. We get the green bar sell. Now we're getting the reversal. Here's our first micro macro cross to the upside. Let's see if we've hit our profit objective yet. Yeah, just hit our high probability profit target. So a nice little scalp on crude oil. Oh, the last tool that I haven't mentioned yet is the Day Ranger. The Day Ranger, well, as the name suggests, tells you the daily range and compares it to the 30-day, 10-day, and 5-day average. So you can see how the market is performing, whether it's expanding or contracting. This is sometimes useful for helping you set profit targets and even stop losses. So we can see that the average range, 30 days, was 145. 10-day 128 and the 5-day 139. So that's quite the mix. So it looks like we're hovering, say, around 140 ticks on the day. Right now we're up to 97. So I think we're going to see a lot more out of crude today because, of course, it is inventory. Yesterday's range was big. It was up to 194, so that's going to start to expand the numbers a little bit. But the way you can do this is, let's say you've determined that the average range is 140 ticks, and you're trading crude oil, and let's say you want to run 20% of that as a stop loss. Well, that means you're going to have a 28 tick stop. Or let's say you're looking to take 20% as a profit target today. Let's say you want to carve 20% out of this market today. So you would have a 28 tick profit target. Or if you want 40% of the daily range, then you'd be looking at a 56 tick target and so on. So Day Ranger, very helpful in that respect. So there's the Day Ranger on crude. Let's take a look here at the Falcon on crude oil. I'll turn the stops off. Working on a trend change signal to the upside. The problem with crude, of course, is we're stuck, right? We're stuck between primary resistance, primary support. The market goes up, hits resistance, bounces, comes down to support, hits it, bounces, and now we are right back in the middle. What we tend to see happen around crude inventory is that the market starts to go sideways. And when it goes sideways, sometimes it gives us a range that we can use our OCO order on. So we're able to bracket the position, buy above, sell below, and just let the inventory report bring us into the trade whichever way it wants to go. But we will look at that as we get a little bit closer. Right now it's looking as though crude may have a bullish breakout. Yeah, there's a surprise, right? Crude prices are low, but prices at the pumps are still high. Here's crude oil on the Eagle. Oh, actually, we did test the lower end of the support here. Oh, I don't know. Maybe it will break down lower. We'll see. We still have some time. So here was yesterday's rally in crude, brought the market up, started going sideways. We did generate a sell signal here just prior to the open. Let's see, did we hit our profit target? Now with crude, I tend to double the profit objectives. Let's see if we hit the double target. Nope. See, there's the problem with crude. It's so expensive. No, we didn't hit the double target, but did we hit the high probability target? I think we did. Yeah, we got the high probability target. But crude does tend to be a little bit more volatile, so a lot of times I'll press the trade a little harder. Angelo is asking, you guys got some great questions here, so if you put a question in the window, please just give me a moment to get to you. Ken is asking about pricing and so forth. I'm going to give you a link and I'm going to send you Adam's email address. So you can talk to Adam at indicatorwarehouse.com, or you can also find out some information here at the Indicator Warehouse page. I do believe there is some pricing here also. But the web designers have been doing some changes, so who really knows? Angelo is asking, Eric, can you change the Raptor from 8 ticks to 4 ticks? Absolutely, Angelo. In fact, that's one nice thing about the Raptor, is it is a little bit more tweakable than the other tools. So you can change the cloud size, you can change the filter size, you can change the parameters on the Raptor. The other tools are more or less locked in their programming, and there's a reason for that. Because we've done a whole lot of testing and we've tweaked them to the place where they work, and we don't want you to break them, essentially. Ovidu is asking, Eric, what is the capital recommended to start with for futures trading? Well, it's like any trading endeavor, right? More is better. If you're day trading margins, of course, are less. And there's a whole lot of markets to choose from. I love a market like the NASDAQ, which is only $5 a tick, and it makes some incredible moves. Well, bare minimum, I would say $5,000. Ideally, $10,000 to start if you're day trading. I know some brokerages will open an account, I think, with as little as $500. But that's really, really tough. Really tough. You might be able to take one trade. It'll be like a crapshoot at Vegas. Although Richard Dennis, the famous trader, apparently started with $400 and ran it up to over $2 million, so who am I to say you can't do it with $500? DTS will work with any market, by the way. It will work on the Forex markets. It will work on the stock market. It will work with ETFs. Essentially, anything that you can plot on a NinjaTrader chart, you can use DTS for. The mid cap. Ken is asking about the mid cap. Let's go take a look at the mid cap here. Where did you go, mid cap? Oh, and somebody's asking about the E-mini also, which I will pull up. Did I not load the mid cap? What was I thinking? The mid cap is one of my faves. Hold on a second here while I get the mid cap, and I will also load the E-mini S&P. All right, so there's the mid cap. I'll throw the E-mini chart up on the other monitor, and we'll just let those load. Yeah, Ken says, if I keep talking about it, perhaps the volume interest will eventually grow from other traders finding this gem. And Terry's asking about the 30-year bond, and yes, I will look at the 30-year bond for you also. The mid-cap really is a great market. For those of you Russell traders who like to trade the Russell, the mid-cap pretty much follows the Russell lockstep. The two tend to move almost identically. The nice thing about the mid-cap is you don't need to subscribe to another market, because the mid-cap, if you're already getting the E-mini or the NASDAQ or the Dow, you'll probably also have the mid-cap in your assortment. Okay, and it also trades at $10 a tick. Great market. We've seen some fantastic moves on the mid-cap. Nice thing about the mid-cap is, I'm going to try to find it here to make a point. It has a personality all its own. Remember how I told you the red bar buy and green bar sell was a weak signal? Well, it's not in the mid cap. In fact, you can get some pretty phenomenal follow through off of a green bar sell or a red bar buy. This is actually very subdued follow through on a green bar sell here in the mid cap. A lot of times, let's see if there was a red bar buy at the end of this. No, there wasn't, but I wouldn't. Oh, well, here there was. You would have had to take a little bit of a heat before the market actually pressed, but these are very often the kinds of moves that we see off of red bar buys and green bar sells in the mid cap. Very good follow through. All right, let's go to today's trading though. We just printed a first micro macro cross to the downside. That's interesting. We had a macro pullback signal right here. Oh, and a green bar sell, which we took a little heat on, but eventually hit our profit objective. Here's a red bar buy I would have passed on. Even though it did rally enough to hit our profit objective, this was too out of sync. These red bar buy, green bar sells, they develop at the end of a trend. They don't develop on their own. So if there's no trend to go with it, it's not really a valid signal. It's too bad this bar here turned yellow. I probably traded just one tick high enough to change the bar color. Otherwise, that would have been our first micro macro cross. But as it is, here's our first micro macro cross right now on the mid cap. Let's take a look here on the Falcon. And here we printed our trend change signal. Now this was a proper trend change signal. And what we're looking for, what I mean by that is we have the move that changes the trend line color. So it changes trend line from green to red. Here's the counter move. This is the move that's going to flush out the buyers. And then here come the sellers. The signal printed right on our primary support. And so far, so good. A little bit of follow through there. Here toward the London Open, we had the early trend change signal. This one develops just as the trend line is crossing over. Remember, so long as we have that test of the extreme, as we call it, so long as we have that failure, that is a safe signal to take. Here was an early trend change signal to the upside. So even though it was relatively quiet, the mid cap had a couple of decent moves already this morning. All right, let's take a look here now at the Eagle. Oh, the Eagle just fired our trend signal to the downside. So once again, we've had the test of the extreme. The market seems to be topping out. And here's our signal where everything is in sync. Our band is in sync, bar is in sync, signal is in sync, filter is in sync. So that just produced the sell signal on the mid cap. Could I cover it up there? No, I can't. That's the problem with the mid cap. That's probably why I stopped following it, because some of these trades are out of my reach for my account. But expecting the mid cap to head a little bit lower. And on the Raptor, oh, we had our trend change signal right here. Printed right here. So the band, oh, actually it didn't change over. I thought our band changed over. So the band became bearish back here. We had some moves against the band, but it never turned over. This is actually a double pullback signal. Actually turned into a triple pullback signal, but this is a signal where we trade into the hard edge of the band, then the market comes out of the band and produces a signal. That tends to be a high probability signal on the Raptor. And so far so good. We would have at least hit our high probability target there, and they're still attempting to sneak a little bit lower. So there's the mid cap on the various tools. A good instrument though. It seems to be a little bit quiet, but then all the stock indices seem to be dragging their feet. Let me bring the E-mini over here. While we're letting NASDAQ load, here's the E-mini. This is the E-mini on the Hawk Scalper. And you can see we haven't generated a signal on the E-mini just yet. Not a surprise, as the E-mini tends to, well, almost be a compilation of the NASDAQ and the Dow and the Russell. It's not always the first to move. Here off the London session, we got a first micro-macro cross lower. That one actually developed a little bit late, but now you see all these yellow bars? That tells you that you're in a choppy market. You're in a sideways market. And people are always asking, Eric, how do you trade a choppy market? Well, quite honestly, you don't. The best way to trade a choppy market is to stay out, because you're just asking for it. Part of the problem of trading choppy markets is just being able to recognize when the market is choppy. So that's a definite strength here with the DTS system, is you're able to identify the market is in chop. And the thing to do now is actually just let it get out of here. Let everybody else beat themselves up. Let it get out of here. It will retest and produce a signal. Or if it breaks to the downside, same thing. It will retest and produce a signal. So we're going to wait for that. We're going to wait for that. And then we'll know we can buy or sell accordingly. But so long as it's moving sideways like this, so long as I'm producing yellow bars, any trade you take, well, it's pretty much a crapshoot. Just flip a coin, heads you buy, tails you sell. It would be about the same. So here's the Falcon now on the E-mini. Nice little double tap off of the secondary support zone. Rallied right up here to the primary support. And now we're kind of sandwiched between the first support line and maybe even as high as the median line. We're working on a trend change signal to the upside, by the way. Did you notice that? Trend line has gone from red to green. Here is our up. Here is our down. So now the buyers are trying to gain control. We've got a couple of warning dots. Filtered, not in sync yet. So we've still got a little ways to go before we get a tradable signal there. And the E-mini now on the Eagle. This is the trend trader. You know what? Just looking at this on the Eagle, it kind of looks like a bear flag to me, where the market might choose to break down and head lower. We did actually get a rule of 3 breakout here against the trend. The rule of 3 is actually a bullish signal. But I don't know, we got a lot of chop going on down here. So perhaps not the Eagle, certainly not giving us much to go on right now. They seem to be honoring this trading channel reasonably well. So we'll see whether prices break down here and head lower again. Okay. Let's see. Oh yes, 30-year bonds. Hold on, I will get the 30-year bond for you. That's for Terry. Richard, while we're waiting for the 30-year bond to load, Richard asks a great question. He says, Eric, would you recommend focusing on one chart first? And secondly, is the Eagle more powerful than the Hawk since it's essentially a higher time frame? Okay, should you focus on one chart first? The DTS system is equipped with audio alerts. So when a warning dot starts to print, it's accompanied by an audio alert. So it'll say scalp or swing or trend, which will let you know which chart requires your attention. So I don't think it's really necessary that you focus, say, on just the Hawk or just the Falcon or just the Eagle or just the Raptor. Most of the time, I just, I'll scan my charts because you're waiting, especially lately, we're waiting for something to happen. But no, I think when you get your audio alert, you go take a look at your chart, you see if the signal matches one of our parameters for a high probability signal. And if it does, then you structure the trade. And if you can afford it, you take the trade, really. Now, Richard's second question was, is the Eagle more powerful because it's a higher time frame? It's actually not a higher time frame. This is something that I know it seems like it's a higher time frame because that's how most people try to do scalping charts and trend trading charts, is they'll look at, say, a 5-minute for scalping, a 15-minute for swing trading, and an hourly for trend trading. But that's not what we have going on here. Yes, the tick sizes are larger on the eagle than they are on the hawk. So in that respect, you are correct that it is a higher time frame, and I'm using air quotes. But the eagle has actually been programmed entirely differently than the hawk. If you're simply looking at multiple time frames, you're essentially using the same information, but just hoping that the larger time frame condenses some of the noise. These tools have actually been individually programmed so that the programming behind the eagle is actually trying to identify a trend. The programming behind the hawk is actually geared up to produce a signal when elements of a scalp are present. And likewise for the Falcon swing trader, it will produce a signal when your swing signals are all in place. Jesus is asking, what's the best system of the four? Well, it depends. I don't really think there's a best. You see, the premise, as I said, for DTS is that each tool is developed to identify a certain market environment. This is why when you're trading, when you're trading and you'll have a good day or a good week, everything seems to be working fine. And then for the next couple of days or the next couple of weeks, you can't buy a trade. Why is that? Well, chances are you're using the same signal that you've always been using, whether you're looking at a moving average crossover or a breakout system of some kind or whatever. Whatever you're using to generate your signal has not changed. So what has happened? Why did it work the one day and why is it not working the next day? Well, it's not working because the market environment has changed. What your signal was working on was one environment. Now, today, you have a totally different environment. But you haven't realized that. So you're trying to use the same signal in a different environment. It's like my grandfather used to say, if the only tool you have is a hammer, then you tend to see every problem as a nail. Right? But it's not always a nail. Sometimes it's a screw. And sure, will a hammer put a screw into a piece of wood? You bet it will, if you hit it hard enough. But is it the best way to put a screw into a piece of wood? No, hardly. Far from it. So to ask which is the best, well, it's not really a valid question because each one is different, right? If the market is in scalp mode, well, then the hawk is going to be best. If the market is trending well, probably the eagle and the swing trader are going to perform the best. So it really depends on what the current market condition is. Like, I don't really expect to get a trade on the eagle today, not the way the market is unfolding right now. Ken knows his history. Ken, a little scoop on Richard Dennis. Richard Dennis, for those of you who don't know, excuse me, had a little tickle in my throat there. Richard Dennis was one of the founders of the Turtle Traders. And if you don't know who the Turtle Traders are, if you saw the moving trading places with Eddie Murphy and Dan Aykroyd, the script was loosely based on the turtle traders, where Richard Dennis and his partner theorized that whether traders were made or born. So they took a dozen people and taught them to be traders, funded $1 million accounts, and they went off and made their fortunes or broke their fortunes. But Ken says the report on Richard Dennis was that the broker allowed him margins not available, and he severely overtraded his account. Yes, it's true. Richard did do that, but he made a lot of money. He lost a lot of money. He's still one of these trading legends. And Ken says, what's your name? Because if you know about, and not only know, but like the EMD, you are my friend. Well, we're going to be good friends then, Ken. My name is Eric. Eric Senft. I also have supportandresistance.com. That's my own website. And of course, I do work with Indicator Warehouse. All right, there's Rock is asking, can you please show the support and resistance for crude oil? Good question. Okay, here's the support and resistance lines for crude oil. This is the ultimate support and resistance suite, by the way, folks. One of those links I sent you earlier will have information about that. This is what we call a system add-on. It will work on any chart. You can use it on a time chart. You can use it on whatever, volume chart, tick chart. It does not have to be DTS. I was hoping crude oil would be a little bit more sideways. We've only got a few minutes to the inventory report. Normally what I like to do is, if I have a well-established range, as I do here, we have the high here, we have the low here, I'll bracket this range, buy above, sell below, providing the market is trading somewhere in the middle, which it is not. So maybe what I'll do, a friend of mine, he likes to let the inventory report hit the floor, let the dust settle, and then he will get into the trade. So maybe we'll use his strategy today. Interestingly enough, we did get a trend change signal right here on the Falcon, just hit our high probability target, and now we're waiting for inventory to unfold. So we'll wait for that. Good morning, Jim. Oh, wow. Jim says, Jim gives me the advanced decline numbers so I know which way the wind is blowing. Right now, the advanced decline, 1,160 buyers, 1,640 sellers. So that's what, about negative 400. So the market has a definite bearish flavor to it today. You wouldn't know it as it keeps trading higher. All right, so we've got about a minute before crude inventory. We'll just stay with the crude screen and we'll see what comes of that if we actually get an order. And I think I'm going to go to a more conservative stop strategy, maybe something like the chandelier, which will help keep me out of trouble. Jesus says, I really like the Eagle Trend Trader, but I need a class to understand it 100%. As a DTS owner, you are able to attend our daily trading room, which is part trading room, part education. So we try to highlight good trades to you, but there's also an educational component where part of it is teaching you how to use your tools. Oh, and I almost forgot about the 30-year bond. I've got the 30-year bond chart up, but the inventory report's going to hit the floor here in a second. Let's see how it unfolds. There they go. So what my friend likes to do with the crude inventory report is he'll let it hit the floor For about the first minute, he'll let the dust settle, and then he'll see if he has some sort of range. So it looks like we could probably buy above there. Oh, by the way, we just produced a trend change signal to the downside here. Come on, get up there a little bit. Show me the bottom end. Show me where the buyers are. This bar style is the mean Renko bars. Were actually specifically designed for the DTS system, but I know that you can purchase them as a standalone. They are fantastic for helping you see the price action. All right, so there's a possible trade on crude oil. Crude oil, of course, one of the world's most volatile markets. All right, here we're coming back now with our another signal. This is our trend line touch signal. Let's see if we have any follow through on this one. I'd be lying to you if I said I wasn't nervous about this trade. I just don't trust crude oil. Not one bit. Mark makes a great comment here. Mark's a DTS owner. He says, a guy can make a living trading just the first micro-macro cross on the hawk, but you have to have some patience and monitor a couple of markets. I took one at 61.13 and got out at 61.48 for a nice profit on just one contract. Well done, Mark. That is nice. What is that, 35 ticks? Well done. All right, I'm going to put this on the shelf for now. We seem to have a little bit of a defined range. And let's bring over the bond chart, and then I'll get back to some of your questions. So here's the 30-year bond on the hawk. A lot of yellow bars suggesting the sideways action. No surprise there. I used to watch the bonds more as a confirmation tool for the stock indices that I was looking at. In other words, if the bonds went higher, I would go lower, and if the bonds went lower, I would expect the stock market to go higher. So right now the bonds very sideways. Not much there, no signal to speak of just yet. We did get a first micro-macro cross here. Believe it or not, with the bonds, because they're $30 a tick, that did hit our high probability target. Nice macro pullback signal here. The macro pullback is easy to identify because you get everything stays in sync but the micro line. The micro line goes out of sync, you produce a signal and pop, little pop to the upside. So there's the hawk, here's the falcon now. And the falcon, oops, sorry, wrong button. Where did you go? Here it is. The Falcon 2 declining, showing a little bit of support here on our median line. Nice bounce off of the resistance up here, kind of skewered by the primary resistance. Got an early trend change signal here, bounced off of the primary resistance line and now seems to be perhaps heading lower. That, of course, will give some legs to the stock market to the upside, perhaps. And last but not least, here is the Eagle Trend Trader. Shoot a trend line across here. I bet we're sitting right on it. Yes, we are. So we actually produced a rule of, well, yeah, that is a rule of three. A rule of three on the Eagle is a counter trend signal. So the band technically is bullish. We should be looking for buy signals, but we generated 1, 2, 3 signals against the hard edge. And that's actually a sell signal. We did get a test of the extreme in that the market is failing here. So it does look as though the 30-year bond is poised to head lower, which will, of course, move the stock market a little bit higher. All right, so there's the 30-year bond for you. Sorry for the delay. Okay, Ovidu is asking, where can I see the volume, the buyers and sellers? Well, of course you can always put volume on your chart. Oh, that's one other feature about DTS I forgot to mention is it's complementary. So if, for instance, I was working with a fellow who loved Bollinger Bands, just had to have Bollinger Bands on everything, that's okay. You can throw Bollinger Bands on your chart. It will still work with DTS. But do you need Bollinger Bands? No. So if this helps you make a decision, then by all means, keep it. If not, get rid of it. But regarding your question as to the volume, the Geiger counter, well, you can put volume on your chart, of course, which was my whole point with the Bollinger Bands. But if you want to see the order flow, that's what the Geiger counter is for. This, again, is an add-on tool. And unfortunately, I refreshed the screen, so the history is, I deleted the history there. But you'll be able to see the order flow right now. You can see the dial very green. I'm getting a lot of buying action. And then you'll be able to see the tape here also. You'll be able to see the history, see who's got control. It looks like right now there are a few more buy orders coming through. And the needle's starting to turn ever so slightly bullish. If we see spikes in the history of the tape here, then that sometimes is an early clue of stop running. The market is actually running the stops. Botond is asking, good morning, Eric. Can I ask what EMAs you're using? Well, no. These are all custom lines. They're neither EMAs or simple moving averages or any of the other moving average styles that are out there. These are custom, and as I mentioned previously, there's a lot more going on behind the scenes than what you see here. These lines that you see on the chart are merely for decision-making purposes. There are very complex algorithms working behind the scenes here to produce the buy and sell signals. Speaking of buy and sell signals, we had a really nice macro pullback here. Only turned into a macro for one line or one bar, but that was enough. Look at that. This is why we focus on these high probability signals, like the macro pullback, like the first micro-macro cross. We did get a macro pullback here. We took a little bit of heat on it, but we should have been able to ride it out. We rarely, you'll see this in the trading room also. Because we're using the trade manager to control my risk, I don't need to place my stop right there. Placing my stop ultra tight is just a formula for getting yourself, getting yourself stopped out before you can even realize a profit. Much better for you to risk a reasonable stop, give your trade a chance to get to your profit target before stopping you out. The market will always show you when it's ready to commit, at which time you can start rolling your stop up. So once we saw these yellow bars and the market start to tick higher, well then I can start to take my stop and I can bring it up and I can roll it, and we eventually hit our profit objective. Much better plan than strangling your trade and getting stopped out here before you even have a chance to get to a profit. A lot of people do that. A lot of people really end up sticking their trades so tight that they never have a chance. Don't be like that. Give your trade a chance to work out. All right. Let's see what else we got going on here. I just want to make sure I haven't missed anyone's question. Great questions, by the way, this morning. Richard was asking, different Richard, what are the support and resistance lines based on? What are the values based on? These are based on 9 months of math. I spent a long time developing these. I used to produce the support and resistance lines daily, and I would publish them. And then Adam said, well, why don't you just program it? And I said, well, I can't. It's too complex. And he said, sure you can. Yeah, okay. Well, about 9 months later, he was right. I was able to crunch the numbers to a point where they produced very good results. But they're not pivots, they're not Fibonacci's, they're nothing like that. All right. Ovadivu says, and speaking of great questions, do you think we'll reach Mars anytime soon? Just joking, he says. All right, well, the NQ, I have to admit, I am amazed. They put in, I think they broke the daily high. Let me get a daily chart up here. Let's see what's going on. Just build a daily NQ chart real quick. All right, so here's the NQ on a daily chart. And did we just make a new high? This was the old high here. 45.47 1/4, and now we are trading, oh, we did 45.55 1/4. That's crazy. I think, well, I think, like, the market really cares what I think. I've been talking about this forever, that the market just seems so top heavy. And this could be the E-mini, could be the Dow. They're all doing the same thing. One thing that's interesting, though, is that we are starting to see a little bit of a breakdown. So notice how we broke through here, If we continue to come up short on the other side of this trend line, we will see the market collapse and head lower. No question. But what might surprise you is that this can actually be bullish. This break here through the bottom can actually be a bullish sign. And why is that? Well, assuming I've drawn the trend line correctly and that it doesn't need to be drawn this way. If the market, let's say this is the true trend line, and it's still a little early to tell. Once the market broke the trend line here, what should have happened? It should have continued lower, right? But it did not. And every time I talk about getting bearish on the NQ, it rallies. I really need to put that attitude, that opinion in a box somewhere. Because I thought the NQ was going to break down way back here. And what happened? New high, comes back down, comes up short of the high, but still that was a very profitable little move through there. So I think what everybody's watching for now is, can the NQ really get up here to 46, 47 in that neighborhood? That is amazing. That is a whole lot of iPhones, folks. Well, we'll see. But at the moment, we are in between signals. Jim says the Russell is the weakest. The rest are all the same. So, oh, I took my E-mini chart off. I've been looking at soybeans. Ooh, Jim says the bank index is starting to tail off a little bit too. Well, we'll see whether that pulls the stock market down. I'm glad you could stop by today, Ken. Ken says it's been a pleasure being here today. I'd be interested in attending the live session, even if I have to start paying for it. Well, here, Ken, before you go, the fellow you need to email is Adam at indicatorwarehouse.com. He might be able to get you a day pass, but he's really the guy you need to talk to. Ken is asking, am I on Skype? Yes, I am on Skype, folks, and I'll shoot you my Skype ID. If you choose to contact me on Skype, though, please put something personal in the contact request, because I get a lot of contact requests, most of which are garbage, most of which are spam. So if you say, you know, I was in your trading room this morning or whatever, so that I know you're a real person and not some spammer, I will add you to my contacts, definitely. Oh, things have gotten awfully quiet. Let's see what's going on with the euro while we're waiting. Let's check out a couple of currencies. All right, so here comes the euro. Here's euro on the hawk. Yikes, what a mess. All these yellow bars again, just telling you this market is in congestion. And that's not a bad thing. Like I said, half the problem is recognizing when you're in congestion. Once you know you're in congestion, you can just wait. I know nobody likes to wait, but that's really the smart thing to do. So here was the European Open, the London Open, first micro macro cross and a macro pullback signal, both firing about in the same region. First micro macro cross to the downside, macro pullback that didn't trigger. Wow, what a seesaw. Oop, okay, here's something you're not going to see in a trading room. This is a first micro macro cross signal. Did it make its target? Oh, it did too. I was going to show you a signal that failed. Because no trading room moderator ever shows you a signal that fails. Well, here was a nice first micro macro cross. This is another one of these situations where it's a first micro macro cross not because the trend lines crossed, but because the signal went all out of sync. Notice the filter, the bars, the trend lines, and then it comes back into sync. So good follow through on that. But generally a very nasty, choppy day on the hawk in the euro. Here's the euro now on the Falcon. Oh, good trend change signal here. Actually, this was a late filter entry signal. Very, very strong signal on the Falcon. Like the first micro macro cross on the scalper, this is a signal I will take almost without exception. Filter goes out of sync, trend line does not. Filter comes back into sync, we produce a signal. That's as good as money in the bank. That signal right there. 99 times out of 100, it will hit your high probability profit target. So that late filter entry signal, definitely something we keep a lookout for. Nothing lately though. And let's take a look now at the eagle, just to round things out. Yikes, look at those crazy swings on the eagle. Not really producing any signals. Well, here was a green bar sell. Honestly though, that would have been a little bit, well, no, maybe not. I was going to say that would have been difficult for me to take real time, but maybe not. Let's see what it would look like. So we hit the hard edge, we come back, green bar sell. Technically the band is bullish. I'm supposed to be looking for buy signals, but you can tell the market is waffling. And the fact that we hit the trend line, I might have given that a ride. Might have given that a poke. Need to adjust my profit objective somewhat. There we go. Go with our high probability profit target. And there we go. So even though it was a fairly ugly looking session in the eagle, there were still some opportunities here to be had on the euro. Trade forecaster says we're in scalp mode for about another 7 minutes, then we're moving into swing mode. Yeah, scalp mode, that seems about right. A real mess going on. Well, if you guys have any more questions, please feel free to ask. Otherwise, the markets have pretty much slowed to a nearly painful grind. We might button up shop this morning. So if you have a question, please type away. If you are trading this afternoon, I would have bet you dollars to donuts that the NQ was going to head lower today. I thought for sure the NASDAQ was going to drop, but it did not. It chose to rally, which is okay. The E-mini, well, same thing. I would have said it was going to tail off today. Jim, if you're still watching the advanced decline, how are we doing? We must still be printing something negative. I think there's greater potential to the downside. I can't help but think that this buying that's going on is reminiscent of a bull trap, where they're just trying to get you in so that the market can start going the other way. Thanks, Jim. Jim says 1,200 buyers, 1,650 sellers. So yeah, we do have a slightly bearish bias to the advanced decline. It seems to be holding fairly steady though for the most part. Well, I think caution is the word du jour. All right, no more questions. All right, maybe we'll button up the room then. Thank you very much for your attendance today, folks. I hope that you found the session entertaining and hopefully even a little bit useful. DTS owners, I will see you in the trading room again tomorrow morning, bright and early. Hopefully the markets will start to shape up a little bit. Next week could be very difficult as we get toward the holiday. Oh, Ovidio is asking Eric, for the beginner trader, what is the best trend to start with? Now, I think you might be asking which is the best tool to start with. You know what? We actually have which instrument is the best one to start with? We actually have oh shoot, now the name just popped out of my head. It's like a trader survey to tell you what type of trader you are and which tool you might best be suited to. Oh, and if you're asking, so you can email Adam at indicatorwarehouse.com and he can put you into touch with that. If you're asking, yes, the trader personality test. Thank you, Mark. That's the one. If you're asking which market is the best for a beginner, I think the NASDAQ. They've got reasonable margins. It's $5 a tick, so you can actually learn without decimating your account. So in this way, it's similar to the Forex. The nice thing about the Forex is that you can really, really dial down your risk exposure without risking too much. Here on the NASDAQ, say I could take a trade like that, it cost me $240. If I'm wrong, that's not the end of the world, right? Unless you're trading a $500 account. But even if you're trading a small account, like a $10,000 account, that is an affordable trade for you to do. And you're not going to leave the trade at $240. Somewhere through here, the market is going to start ticking higher. And once you start seeing it tick higher, well, then you can start rolling your stop in and you can reduce that risk. So even if it ticks higher and then all of a sudden reverses and stops you out, you may suffer, say, oh, that looks like it might be about $90 or $100 loss. All right, so just because your original risk exposure might be 240, 250 does not mean that that's exactly what you're going to get stuck. The unfortunate thing about the Forex is the spread. The spread makes it very difficult to scalp the Forex because the broker is essentially taking your scalping profit. But If you're taking a longer term perspective on the Forex, if you're looking to buy and hold or sell and hold, you can probably do a little better. The stock market, there's some penny stocks out there that you can trade with very little risk exposure. I think that's the key, though, is when you're starting small, choose a market which is affordable, which has a low tick value. The NASDAQ is great. The YM, that's the mini Dow, is fantastic. The 5-year note is also a very good market. It's painfully slow, but it's cheap, and its moves are very steady. So it's hard to hurt yourself. And hey, at the end of the day, so long as you make money, what's it matter? Yeah, Jim's vote is for the YM and the NQ also, and I would agree with that wholeheartedly. And then as you start becoming proficient in that and you start making some money in those markets, well, then you can expand your horizons. But quite honestly, you don't need a big mix of markets, and you don't need a whole lot of trades. What you need is you need a reliable signal, you need a way to manage your trade once you're in it, and you always need to be correctly capitalized. So you maximize your earnings when you have a winning signal, you minimize your losses when you have a losing signal, and that's what this whole trade manager tool does for you. Very, very important tool. Okay, you guys, seems like a good spot to close today's session. Again, DTS owners, I'll catch you tomorrow. Everyone else, thank you for your attendance. I hope that you'll stop by next week. We'll talk to you later. Bye for now.